life insurance are best suited for business owners?
Think of a hierarchy of needs, somewhat of a pyramid.
How can insurance help business owners with succession planning?
So insurance can really offer that financial stability during a time of transition.
I'll be bringing each week a different guest with all the answers that you have the questions for. And this way you can come back to my podcast for any questions that come to your mind, and you can focus just on working, as everything else this podcast will provide you. Hi, and welcome to Simple Wealth Wisdom Podcast. I'm your host, Gakhar. My work helping successful business owners and professionals like you build and maintain your lifestyle and legacy exposes me to many very interesting specialists in tax, accounting, law, estates, and investment areas. In this podcast, I share those people with you and your team so you can hear directly from them. So, if you're a successful business owner or self-employed professional, stay tuned for a lot of business building value here. And today, I'm very, very excited to have Megan Pauline from BMO as my guest. Megan is the Business Development Manager. In today's program, I'll be asking the questions you ask me so you can hear directly from her. So let's get to it. Welcome, Megan.
Thank you so much, Sim. It's great to be here. Thanks for having me.
Thank you so much for coming in this lovely weather. And I love that you made a point to come here and you're ready to speak to my clients because they really want to hear a lot from BMO's side.
Of course.
Megan joined BMO in 2019 and has nearly 15 years of industry experience. Over this tenure, Megan has gained a vast range of knowledge from working in various capacities. This includes supporting tax and estate planning for high net worth clients in BMO's private wealth division, and prior to that, working for a large Canadian insurance company helping advisors grow their business. She's a graduate of Concordia University in Montreal, Quebec, and is life licensed in Ontario. Wonderful. Once again, welcome, Megan.
Thank you so much.
I'm going to ask you a few questions that my viewers want to really ask. Most of my viewers are business owners and self-employed professionals. So the first question which everyone wants to ask, and I want to ask on their behalf, is what types of life insurance are best suited for business owners?
Yeah, and that's a great question. So when it comes to insurance planning for business owners as well, we kind of think of a hierarchy of needs, somewhat of a pyramid. So at that very bottom, the broadest part, we have the risk mitigation, the risk planning needs. Mm-hmm. So in the earlier stages, when a business owner is building their business, they might have mortgages, debt, other liabilities.
Right.
So they ultimately want to protect their family members and business associates in case of the unknown, if something were to happen to them. So as an example, if they were to pass away unexpectedly, if they were to be diagnosed with a critical illness, or if they became disabled.
Right. You know what? That's what everybody knows insurance as, is risk mitigation. You're putting the risk on somebody else's shoulder. So insurance companies taking the risk rather than you taking the risk if you have insurance. Absolutely.
Exactly.
Yeah.
And it really, just provides that peace of mind for their family and those business associates who are ultimately relying on that business owner to create a successful business.
Mm-hmm.
Kind of going back, I mentioned the pyramid, the hierarchy of needs. If you kind of move up to the top, that top triangle, the summit of the pyramid, we have a much smaller population, but an equally important need, which is succession, generational estate planning.
Absolutely. Absolutely. That's a big part.
Huge.
That's the tip of the pyramid.
The tip of the pyramid.
Mm-hmm.
So these clients, a little bit of a different life stage than what we saw at the very bottom, the broader needs. So at that very top of the pyramid, we have clients who, they've built a successful business. There's cash maybe accumulated in that corporation where they don't need it to run the business. They don't need it for operations. They don't need it for lifestyle or retirement. It truly just is surplus. So clients in that circumstance may look to take a portion of that surplus and allocate it to a permanent life insurance policy. Mm-hmm. It's a very different take from that risk planning side, but it does come with a host of benefits and advantages.
Absolutely, because someone will have to look into that once they're not there anymore. Because a big chunk of those retained earnings will be taxed if there's
Yes.
no planning. And also, when they're passing it to the next generation, there will be taxes that the next generation will have to pay. So, if there's a planning done using insurance, that can really help in estate planning.
100%.
Yes, that's wonderful. And now that takes me to the next question,
Yeah.
which is succession planning. How can insurance help business owners with succession planning? I know you already talked about the tip, and that's how. So if you want to say something else in detail about succession planning.
For sure. And, a very important aspect of the financial planning process. So insurance can really offer that financial stability during a time of transition. So, as an example, a few succession planning mechanisms that come to mind using, kind of focusing back on that pyramid, looking at the risk planning. So looking at maybe a key person protection. If there's somebody that's absolutely pivotal to the success of the business, making sure that they're covered adequately. Buy, sell. Sometimes there's a formal agreement in place that requires insurance. That means that if a key shareholder were to pass away, there needs to be a level of insurance so the surviving shareholders can purchase those shares.
Absolutely.
Then, kind of pivoting from there, we also then have the estate planning needs. So those clients who have accumulated cash within their corporation, looking to allocate that to the permanent insurance plan, they benefit from the tax deferred growth year over year. And then they get to make sure that they're doing a tax efficient wealth transfer to their heirs, which is typically a very important goal and objective of business owners who have ultimately worked hard their entire life and want to make sure those funds get into the right hands.
That's very well said. I'm going to just go a little off track. I received a call from a client yesterday, Megan, and the client was just telling me, he said, Sim, I want to book an appointment with you, and I want to book an appointment for estate planning, and I want to book an appointment for succession planning. And before I book that appointment, I want you to tell me the difference between estate planning and succession planning. So do you want to answer that for me? Maybe this is a question from many other people as well.
Yeah, no, that's a great question. So personally, when I think of succession planning, what's in the word succession? Success.
Success.
These business owners, they want to make sure that if something happened to them, that there is that long-term success for their business.
Right.
When I think of succession planning, utilizing life insurance, I think of the financial peace of mind that the insurance provides in that time of transition. So that's why, you'll notice that the examples I provided too, they weren't limited to estate planning scenarios. Key person, buy, sell coverage, that's not limited to transferring wealth necessarily to the next generation. It offers financial protection. Whereas when we start getting into estate planning, that's really, the clients where they recognize that they have surplus and they want to make sure that it does get to their heirs in that tax efficient way. But it's a slightly different lens.
Yeah, but they are somehow interconnected as well.
They are interconnected. Estate planning is a form of succession planning.
Yes, that's what I wanted to hear. Because when the assets are being transferred to the next generation, if there's a proper estate planning done, then successor would have more wealth in their hands if they have proper planning done. Am I saying it correctly?
Absolutely. And this is planning that, there's a lot more focus coming into this type of planning. And, clients who run a successful business, having that awareness of the value that life insurance can bring, through that tax deferred growth, even while they're living. If they're accumulating cash value within their policy, that can provide a host of benefits while they're living. But also, and I think, a top priority among a lot of business owners is that tax efficient wealth transfer, getting as much money as possible tax efficiently into the hands of those beneficiaries.
So rightly said. And you know what? A lot of times, because my practice revolves around business owners, and I always see that their business is like their baby. I've used this word in every podcast that I've done, that their business is their baby. And they spend all their time in that business. But the time comes when they're not working, they are going to go old one day. And that time, they're not going to be able to work that much of time. They're going to pass it on to the next generation, or even if they have people running the show for them, they still need income. So insurance can be placed to provide them as a retirement income as well, where they're not actively working. Do you agree to that?
I definitely do. That's the great thing with permanent life insurance is there's so many different levers. There's so many ways you can structure it to really cater to different needs. And I think that for business owners who, they're not employees, they maybe don't have pension plans, they don't have the other saving vehicles that other people might have, the insurance is a really unique opportunity to acquire tax preferred income during retirement as a supplemental income stream. They'll build those strong cash values if structured accordingly. And it's just a unique way to build that into a retirement plan.
Now, are there any unique considerations or strategies for business owners looking at life insurance solutions? Is there any special strategies that you feel that they should know about?
100%. So, just to kind of take a step back, when we're looking at corporately owned permanent life insurance, the structure that we typically do see is that the corporation is the owner, the payer, and the beneficiary.
Yes, absolutely.
So that's kind of the typical way that we would see it structured. So factoring that in, the common strategies that I see, we started talking about estate planning.
Right.
So there's certain strategies in place that are designed to really build longer term death benefit, estate values within the policy on that tax deferred basis. And that can support clients who, they're not really concerned with liquidity. They're not too concerned with building cash, but it really just maximizes the death benefit values and ultimately the payout to their beneficiaries at a later date. Builds value over the long term. That's kind of one goalpost. But then there's other strategies which are designed to really build strong cash values. Some of them over the long term, and that would kind of tie into the strategy that you just mentioned, where they can look to leverage part of the cash value for supplemental retirement income. And then there's other strategies, on that same vein of building cash value where they really want to build it early on. Clients who they don't want to have all these funds tied up into their insurance policy. They want to have that liquidity. I'm
going to come to that question. That's my next question. But before I come to that question, I want to just give everyone a brief summary of what you said, that insurance can be very well structured and positioned for retirement planning, estate planning, growing the retained earnings tax-free, because as long as the money is sitting in the policy, there's no T5, there is no tax receipt coming, and it's growing all tax-free, and succession planning. And the end, when it passes to the next generation, there's a huge death benefit, which can take care of everything. So that's wonderful. Somebody is paying, a business owner is putting a huge lump sum into the policy because they care for their estate planning, their succession planning, but you never know tomorrow. The time might come up, they've put the money in and they want to access the money immediately. So now my next question is, how can life insurance be leveraged as a component of diversified investment portfolio? If somebody is investing the money in GIC, in their corporate retained earnings, instead of that, if they position that money into a whole life policy, that means diversification of their investment.
It does.
What would you like to say about that?
Yeah, and I think that that's getting more and more on clients' radar, really looking at permanent life insurance as an alternative investment option to perhaps, fixed income, as you mentioned, instead of GICs. So with, use the example, a whole life policy. When a client makes that policy into a whole life plan, all growth within the policy is tax deferred. So
absolutely.
And that's so important.
Important.
Mention that, there's no T5, there's no annual tax bill. Very, very big advantage compared to other investment vehicles. That being said, the way a whole life investment strategy is typically managed. So, a client has the option, they have a base premium that they need to put into their policy. But for those more affluent clients, business owners with that surplus, they do have the opportunity to put more into the policy with some additional funding. When they start doing that, there's a certain component of the premium, the deposit that they make that, has the opportunity to grow through an underlying investment portfolio. In a whole life plan, the way the investment strategy is managed, typically, each carrier is a little bit different. I'll just speak, in general terms, but typically there's a fairly large fixed income component. There's certain, equities, sometimes real estate, but it's typically designed to offer longer term stability.
Absolutely. Smoothing of the returns.
Smoothing of the returns. So year over year, and I think we kind of saw that over the past few years, the markets have been volatile. But there's no massive swings in terms of crediting rate or dividend scales across, whole life products. They remain pretty stable. They're more of a lagging indicator. So over time, they will fluctuate, but year over year, they're pretty consistent. So clients still get to benefit from the growth to the money that they're depositing into the policy on that tax deferred basis. But there's ultimately more peace of mind. They don't need to worry about those massive fluctuations kind of year over year that other investments could incur.
Right. And let's say somebody wants to, let's take an example, okay? Let's say a very affluent client puts, let's take a round figure, puts $100,000 towards a policy premium, got a $2 million coverage. I'm talking about somebody maybe 50 years old. Puts 100,000 and then, needs to borrow that money maybe after 5 months, needs to put that money into the business. But now the money is in insurance policy. Is there a way they can take out that money?
There is.
There is. And that's what I want to hear from you.
And it's a strategy that has gained popularity over the years. The typical term, I'm sure your clients have maybe heard different terminology, is an immediate financing arrangement or an IFA.
Yeah.
How that basically works is a whole life plan that's accumulating cash value. Use the example, they've paid their premium, they're 5 months in, and they want access. They need liquidity. They want to reinvest those funds into their business. Clients have the ability to go to a lending institution of their choice. Typically, the path of least resistance is whomever they already hold their assets with, but each carrier typically works with a range of lenders. They have the ability to take their policy and put the accumulated cash value up as collateral. Okay? By doing that, they're able to borrow typically 90 to 100% of the cash value because whole life, kind of going back to my comments of how stable, consistent the returns typically are.
Banks love it. Lenders love it.
They love it. They don't have to worry about it.
Because they know one day you're going to die. Nobody's going to be here forever. That's nice. That's nice. So that makes it very clear for everyone that if for any reason they put the money in the policy and in case they need to use it, they have access to the funds for their immediate needs. If they do not need to use it, they can leave it in the policy and it'll grow for their retirement. They can withdraw it or they can even pass it on to the next generation because the cash, the dividends coming up in the policy are buying more death benefit. So the death benefit, what they start with, is actually also increasing.
Yes.
Wonderful. That leads to my next question, Megan, which is very interesting. Can life insurance play a role in protecting my business from potential creditor claims or legal liabilities? Business owners are always exposed to this. So, and nobody wants to lose what they have made because, again, that's their baby. They've worked very hard for it. And is there any way life insurance can put a wrap around a cover, a creditor proofing? Any comments on that?
Yes. So as you mentioned, these business owners work hard their entire life to build their baby, to build their legacy. A unique attribute of life insurance is that it is creditor protected. And so that extends the death benefit, the accumulated cash value. Creditors don't have access to that. It's protected typically. Better yet, because they appoint, in certain circumstances, direct beneficiaries, the payout of their life insurance policy cannot be intercepted. It will still go directly to the appointed beneficiary. So when you think of other vehicles or other investment tools that clients could be looking at, having that layer of creditor protection through the life insurance, it just offers that extra peace of mind and protects them from the liability of, having their business exposed without the life insurance.
Would you be able to share it with an example? Let's say, again, I'm going to stick to 100,000. Somebody has 100,000 in the retained earnings and they are investing it with a bank in GIC. And if they invest the same money, 100,000 in an insurance policy, how would you provide the difference in terms of creditor proofing on both the sides? Let's say the business gets sued. What happens to that 100,000, what was in the bank versus what was in the insurance policy?
My understanding is that the, say, $100,000 sitting in the bank through the GIC, fully exposed, fully liable to creditors in that circumstance.
Right.
Whereas that same $100,000 sitting in the life insurance policy, it's fully protected. The creditors would not have access to it. It would be off limits.
That's wonderful benefit for all the business owners when you never know. And this is the best way to protect yourself as well. And at the same time, you're putting your retained earnings in the same kind of growth because, as you said, in a life insurance policy, there's smoothing of returns. Whereas the companies have paid dividends for many, many years. Even if the market drops or goes up, they're not affected that much. So they have all the benefits of growth within the policy with no tax receipts. And either if they want right now, they can take it right now. They want it later on, they can take it right now. Estate planning, retirement planning, succession planning, growing their retained earnings. Wow, corporate surplus.
Yes.
Yeah. So this is something wonderful. Is there anything else about the life insurance benefits, very specially to business owners and incorporated professionals, that you think you want to share that we haven't talked about?
So a few other considerations, and I think just identifying who this type of planning is best suited for. So when we're looking at, say, permanent life insurance, typically clients kind of in the range of age 45 to 65 is kind of where that makes the most sense. It also ties in, going back to that pyramid, clients who have, accumulated some wealth. It obviously takes a few years to build that successful business.
Absolutely, yeah.
So that's kind of where that typically does kind of fall into place. Also, because it is life insurance, it is subject to a full underwriting process.
Yes.
So maybe making sure that, if you have health concerns, if you have lifestyle factors, just keeping that in mind that it could affect your life insurance application, and just being fully transparent when speaking with your advisor, just to really make sure that you're prepared for the outcome and, the expectations are set.
I just want to add something here that a lot of time people think, oh, they've got diabetes, they wouldn't be able to get insurance, they're uninsurable. No, they're not uninsurable. Of course, this might change the rate. You might get a decline. You might get approved with the rating, but it's a good idea to give it a try.
Yes.
Because if you're going to a bank to do a GIC for 100,000, they're not going to ask you health questions. But if you're going to do an insurance policy and get all the other benefits of succession planning, estate planning, tax saving strategies, you need to have a medical, as Megan mentioned, but they'll be asking you health questions. That brings to the next question. You said 45 to 65. Isn't it good that when they're younger, at least lock their insurability?
100%. So term life insurance is such a great way to start the planning process. Typically, the age range when that makes sense is much, much younger. So clients, if they've locked in their insurability when they're in their 20s or 30s by applying for term coverage, the rates are typically far less than permanent, very affordable.
Yeah.
And then, of course, it opens up long-term flexibility. So most term plans with various carriers do have the ability to convert the term plan to a permanent solution within the carrier suite, and subject to no medical underwriting. So even if the client's health picture has changed since they applied for the term, they can still explore the conversion to permanent, without the need to provide evidence of insurability.
Perfect. So when they're young, they lock their insurability, and at the later stage, as the business is growing, even if they are growing and they got some health condition, they can still get every advantage of that succession planning, retirement planning, estate planning.
Exactly.
Wonderful, wonderful, wonderful. That was fantastic. I really loved what you said. And thank you so much, Megan, for sharing all that information. This has been very informative and helpful, as I always say, not only for the viewers, but also for me. And that was another episode of Simple Wealth Wisdom Podcast. Please let us know in the comments what you like the most about this podcast. And if there's anything else you want to see or ask, I'll make sure to bring that to you in our future podcasts. Until next time, stay safe. I'm Sim Gakhar. Thank you.